What if I told you that by learning one single skill, you could unlock financial, location, and time freedom? A skill that could help you generate anywhere from 4 to 5 figures a month or even more with as little as 1 hour a day, Monday to Friday. Sounds too good to be true, right? Well, that's exactly what Forex trading can offer, and in this video, I'm going to show you step by step how to get started. By the end of this video, you'll know exactly how and when to enter a trade in the Forex market, and here's the best part. You can do it without having to risk your own money. How is that even possible? Stick around till the end because we're going to take it one step at a time. Firstly, we'll cover the basics, what Forex trading is, and how to place your very first trade, and then I'll reveal exactly how to make these profits without having to risk your own personal funds. Let's dive in. What is Forex? Forex means foreign exchange. It's a market where buyers go against sellers. For example, we have the Forex pair Euro USD. On this pair, if the market is heading towards the upside, it means the euro is stronger than the US dollar. And when this market goes bearish, goes to the downside, means that the US dollar is gaining strength and the euro is weaker. And our job here is to be able to ride these trends in order to then make profits. And now that you know what Forex is, you might ask, well, why this skill and not something else? Well, in my opinion, Forex trading is probably the best skill to start in 2025. Why? Because you do not need upfront capital as you'll need in several other options. This is the first thing. Secondly, this is a skill that once you unlock, you can reach financial location and time freedom, and everyone aims for that. Number 3, you don't have a boss. You are your own boss and you can organize your schedule however you want. And lastly, this is a super scalable skill because as soon as you become profitable, sky is the limit in terms of how much you can build with it. Now we're going to talk about TradingView because this is exactly where you will spend your most time as a trader. So TradingView is a platform where we as traders analyze the markets to then know whether to enter a buy or a sell. Okay, so this right here is probably the most important platform that you need to master as a trader. So as soon as you open TradingView, right here on the top right corner, you will have the sign up button. Click the sign up button, enter your email, your details, and create an account. After that, you will be here on the main screen. And what you want to do is you want to check your watch list. Over here you have your watch list, and this is where you basically have pairs that you are trading. You want to click the plus icon and you want to search the symbol that you want to trade. For example, let's use Euro USD. Okay, so you will click Euro USD. You can either search for it or you can go in the Forex section and search for it here. And then what I want you to do is click the icon on the Euro USD that has Oanda as provider. Oanda is the best provider in my opinion, and that's the one that you should choose, okay? Because we can see that we have multiple Euro USDs, okay? We have on FXCM, on the Capital.com, but in my opinion, Oanda is the best, so make sure to select that one. After you select it, you will then be able to click on it, okay? And then you need to click the See on Supercharts button, okay? Click See on Supercharts, and here you go. You will now have the chart opened, and here is where all the magic happens. Here is where you will analyze this exact pair as well as any other pairs. Now that you know how to add the pairs and how to click them and open the chart, let's talk about the chart itself because there's a lot that you need to be aware of. First things first, you might ask, well, what are these bars on this chart? These are the candlesticks that tells us if the price is bullish or bearish. Normally, you will have this candlestick green and red. Green for the bullish ones and red for the bearish ones. But I've set them to blue and gray because in my opinion it doesn't play with your psychology as much. This is totally up to you, it's personal preference. Now besides the bars we have these small lines here. You might ask, well, what are these small lines? Well, these right here are the wicks of the candlestick. Basically the candlestick, when it opens, it has a high and it has a low, and then when it closes, that's when the body closes, and the wicks basically showed you the high of that specific candlestick as well as the low of that specific candlestick. And now up here we have the time frames. What are these time frames? Currently I am on the 1 hour time frame, but I can go on the 4 hour, I can go on the daily time frame. For example, on the daily time frame, what you need to understand is that one candlestick means one full day, 24 hours. On the 4 hour time frame, one candlestick means 4 hours. On the 1 hour time frame, 1 hour, and so on and so forth. You have multiple time frames that you can choose from. How to do it? You go up here, okay? You click this icon and you can see you have seconds, okay? You have minutes, you have hours, okay? 1 hour, 2 hour, 3 hour, 4 hour, days, week, and monthly time frames, okay? This is totally up to you. These are my favorites, and then you will click your favorite time frames depending on what type of a trader you want to be. Okay, you can be a scalper, a day trader, or a swing trader. If you want to be a scalper, then you will focus on these time frames right here, from the 1 minute all the way up to the 15 minute. If you're a day trader, you will focus on these time frames from the 15 minute all the way up to the 1 hour. And then if you're a swing trader, you will focus on the 2 hour, the 4 hour, and the daily, and also the weekly time frame. Okay, so depending on what type of trader you will be, you will then select the time frames accordingly. Okay, so right here you will favorite the time frames that you will want to use. These are the time frames I'm personally using, and then you can literally just browse through them. Now that you know how the time frames work and what the candlesticks are, the next step is for you to understand the tools. Okay, basically the tools are right here on this left side, and right here this is the toolbar. This is basically the tools that I am using on a day-to-day basis. And you might ask, well, how can I get a toolbar like this to not have to go in the menu every single time? Well, it's really simple. All you gotta do is click this icon here, and then you need to start the tools that you will use. For example, I am using the horizontal ray. I just start the horizontal ray. I start a vertical line. I start the trend line, okay? I also start the fib level, and that's how you will have this toolbar here that you can easily use. It's very easy because all you gotta do is, for example, click it, and then you can apply the tool, okay? You wanna use the trend line, you can apply it right here, okay? That's why it is very important for you to have a toolbar with the tools that you are using. On the right side here, we have the price of the Forex pair, and here, down below, we have the time and the date. Another thing that you need to understand is that we as traders need to trade during trading sessions. What are these trading sessions? To keep it super simple, we have 3 main trading sessions. We have the London session, we have the New York session, and we have the Asian session. During the London session, the best pairs are Euro pairs and GBP pairs. And then during the New York sessions, the best pairs to trade are the US dollar trades, and as well as indices, as well as gold. Those are the most volatile pairs, because basically if you trade during the New York session, you need to understand that you will trade when the banks in the United States are open. When you are trading the London session, you should trade when the banks in the United Kingdom are open, to provide that volatility for you to be able to trade during volatile times, because you do not want to trade when the market isn't volatile. And then we have the Asian session, where pairs like the Japanese yen are very volatile, and that's a session where, for example, you shouldn't trade London pairs or New York pairs. You should only focus on Asian pairs. So knowing this, you then need to ask yourself, depending on your personal schedule, okay, when am I able to trade the Forex market? Is it during the London session? Is it during the New York session? Is it during the Asian session? After that, after you establish, you then also establish what pairs you will trade. Because, for example, let's say you are willing to trade the London session. If that is your case, then you will avoid the Asian session pairs. It is very important for you to understand this. Personally, I trade the New York session, and this right here is my watch list. I trade gold, I trade GBP USD, I trade US 30 NAS 100. These are very volatile during the New York session. I trade GBP JPY, I trade USD CHF, and I trade Euro USD. These are the pairs that I trade on a day-to-day basis based on the session I am trading. Now that you know where you will spend most of your time analyzing the markets, the next step is for you to know where you can enter these trades. And this brings me to the trading platforms. The most popular, in my opinion, and the best trading platforms out there are MetaTrader 4 and MetaTrader 5. You can use either one. I personally use MetaTrader 5 because it's the newer version, and you can download it directly from your App Store or, of course, your Google Play Store. Now that you install MetaTrader, you need to click on it. The app will open and it will look something like this. You need to go to Settings, click on New Account, click Meta Quotes, click on Demo Account. Okay, and right here, fill in your details. Now that you filled your details, you can select the leverage, you can leave it as is, and then the deposit, you can choose how big the account should be, and go realistic here, okay? If you, let's say, want to trade a $3,000 account, then you should have a $3,000 demo account. Click accept, and then click register. After that, click start, and now we just opened our first demo account. You can see this right here is your demo account. This right here is your trading balance. You can see you have $3,000 in your balance. And right here, you might ask, what is the section here? The quotes section. Well, this section is pretty much the list of pairs that you are trading, okay? So right here, in order to modify this list and have the pairs that you are trading, you want to click this icon top right, and you want to select all the pairs that you do not want to trade, select all of them, and then click this bin icon right there. Okay, now you can see there's no more pairs in the quote section. And now what you want to do is you want to search here, you want to search for Euro USD. You want to click the plus icon, and right here you can see that you have your pair. Okay, you have Euro USD, you can click on it, you can trade it, you can enter the chart, you can do all these type of things, but we'll get into that in a second. Now that you added your pair, this right here is the current price, the bid and the ask price. If you want to enter a trade on this specific pair, you will click the trade button, and right here is where you will be able to enter a trade. You have multiple ways of entering a trade. You have instant execution, you have buy limit, you have sell limit, buy stop, and sell stop. Okay, these are the ones that I personally used ever since I started trading 5 years ago. Now, let me explain how each and every single one of these work. So the first one is the market execution, the instant execution. This means that you will enter the market right then and there. You will input your lot size, you will click the sell or the buy button, and you will enter the market right then. Then you have the sell limit option. The sell limit option means that you will bet on the market to reject from the rooftop. Basically, it's like throwing a ball into the roof and the roof will push it back down. That's how the sell limit works. You pretty much say, okay, let's say Bitcoin is currently at 100K, but you predict that Bitcoin will head to the upside and will reject from $110,000 and will go towards the downside. That means that you will place a sell limit on the roof, which is 110K. Bitcoin will go there, and as soon as it will hit 110K, that's when your order will trigger and you will get into the market for a sell. That's the meaning of a sell limit. The buy limit is literally the opposite. You bet that the floor will hold. Now, buy stop means that the roof will not hold, that the price will go right through the roof. Okay, this is the easiest explanation and there's no point for me to overcomplicate it. So this means that you will place a buy stop at 110K, knowing that the price will go through it, it will trigger you, and it will continue to go towards the upside. That's when you should place a buy stop. And a sell stop, when you predict that price will go through the 90K level, through the floor, and will continue to head lower. Now that you know exactly how to enter the markets and the options you have to do that, the next thing that I want to show you is the history tab. This tab right here is where you will see exactly the trades that you took, how they play out, and you can even go back in time by clicking this button here. You can go back and see the history for the past 6 months, 3 months, last week, and you can even click the custom button if you want to select a specific start or end date. And you can also select the symbols that you want to see, pretty much to see the performance that you had on Euro USD only, for example. You can do that as well, and I find it really, really cool. And lastly, we have the chart. Okay, so right here on the chart, you will see pretty much the candlesticks as on TradingView. But to be honest, we will not waste any time on the chart, because on MetaTrader, I never stay on the chart, because like I said, I do my analysis on TradingView, and based on that analysis, I hop on MetaTrader and I enter the trade. So I'm not doing anything on this MetaTrader chart, if I'm being totally honest. The next step is to sign up with a broker. Firstly, you need to understand what the broker is. And a very easy explanation is this. The broker is pretty much the middleman between you and the markets, because without a broker, you will not able to enter the markets. It's as simple as that. And now in terms of what broker you should choose, that is totally up to you. It depends. It depends on the region. It depends on the type of trader you want to become, because there's brokers with bigger spreads, there's brokers with bigger commissions and lower spreads. That's something that you need to decide, and you need to do your own research on it in order to find the best broker for yourself. I personally use IC Markets, and I've used them since I started, and I know that they are very reliable. But once again, best would be to do your own research on this topic and choose the best broker for yourself. Now I'll hop back on TradingView, and we're going to discuss about technical analysis. Technical analysis is probably the most important aspect in trading, because based on your analysis right here on the TradingView graph, you will then go on your MetaTrader and click the buy or the sell button. And after that, depending on whether your analysis was correct or not, you will have a winning trade or a losing trade. And this means that if your technical analysis is more times right than wrong, that means that you are a profitable trader, and that is ultimately your goal. Now I will share with you the basics of technical analysis for you to get a basic understanding on the markets before deciding to click the buy or the sell button on your MetaTrader for your first ever trade. And of course, if you like what you see so far and you decide that this is the skill that you want to go for and you want to be serious about it, you should click the second link down below in my video description and apply for my mentoring program, where you will be able to work with me one-on-one, learn my strategy, and ultimately become a profitable trader. These people did it, so can you. We as traders basically bet if the price will go higher or if the price will go lower. On this example right here on the euro dollar chart, if the price will go higher, we basically bet that the euro will gain strength against the US dollar. And in the opposite case, if we bet that the price will head lower, we bet on the US dollar being stronger than the euro. And in order for us to make this bet, we need to apply technical analysis. How can we do that? First things first, we need to look at the trend, okay? Always in trading, you need to understand that the trend is your friend. And right here from the get-go, on the 4-hour time frame, I think we can all agree that euro dollar has been on a downtrend. What does this mean? This means that US dollar has been stronger than the euro, okay? Why? Based on market structure. Market structure is pretty much identifying the lows and the highs of the markets. Right here, I will quickly show you what I mean. So right here we have a low, right here we have a lower high, right here we have a lower low. Why is it a lower low? Well, because this previous low was broken, okay? Then right here we have a lower high, we have a lower low, a lower high, a lower low, okay? So right here, this right here is a bearish market, whereas a bullish market will look something like this. Let me try to find you a bullish market, okay? Check this out. A bullish market looks something like this. Higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, okay? This right here is a bullish market. This is basic market structure, okay? So knowing this, knowing that the market structure is bearish, it means that we are on a bearish trend. That means that we should look for bearish opportunities. We should look for a sell. Basically, our bet is that the market will continue lower, all right? So based on that, how do we know when to enter a sell? Well, the next thing is to identify support and resistance levels, okay? To do that, it is very simple. What I want you to do is go on the line chart, and on the line chart, we will look where price rejected from, and we will use the eclipse tool. Okay, so we have a rejection right here. We have another rejection right here. We have another rejection right here. We can see around the same level. Okay, so that shows me that this area here is a important area in the market where price will most likely reject from. Okay, right here we have another rejection, we have another one right here, and yeah, we can see that around this area the price had multiple rejections. Okay, and now we will place a line at the average, and what I want you to do now is draw a rectangle on this line. Okay, right here this will be an important level in the markets where price could reject from. Now we will go back on the candlestick chart. And now that we're back on the candlestick chart, we can see that price rejected from this level here. Okay, it respected this level here, it rejected, and currently it is heading towards the downside. So now, knowing that we have a bearish trend and that we are looking to enter a sell, and that price rejected from this important level, we can enter a sell. Okay, we will enter a sell using the sell position tool. Don't worry, I will discuss about what this tool here is, because I'm sure that it might be new to you. So this is basically where we want to enter the sell right now. The stop loss is pretty much the level where you will get stopped out of the trade. Say price will reach 1.05282. That is when you will get stopped out and you will get out of the trade. The trade will be closed in a loss. Okay, and the take profit is pretty much the target, basically where you think price will go and where you want to get out of the markets in profit. And now you might ask me, well, what's with these numbers here, with this 27.4, with this risk reward ratio of 2.01, with the target? Well, let me explain. It's very simple. The risk to reward ratio means how much you are willing to make. It's a multiplier. Okay, so for example, if the risk to reward ratio is 2, that means that if you are risking $100, if this trade hits the take profit, you will make $200. Okay, let's use a risk to reward of 4. In this example here, if you're entering a trade here risking $100, and if it's going towards your take profit and it hits it, you will make $400. You pretty much multiply the amount that you risk by 4. That's super simple. And now, in terms of the number here on your stop loss, 27.4, that is the size of your stop loss in pips. 27.4 pips is the size of this stop loss right here. Let's make it 25 pips to be right above this candle. Okay, so let's say that we are willing to take this trade based on our technical analysis, and we want to aim for this low here. Okay, we want to aim for this low because we think that the price will continue to head lower. We will have a risk to reward of 6.7R. Means that if we're risking $100, we aim to make $670, which is a really good trade, and it's definitely possible. But what I would suggest you, especially if you're a beginner, I would suggest you to stick to a smaller risk to reward ratio. Why? Because you need to understand that if you have a small risk to reward ratio, you will have a higher win rate, because it's a higher probability for price to travel this distance here than traveling all this distance down here. Okay, whereas if you have a big risk to reward ratio, you will have a lower win rate. Yes, strategies that have a 1 to 5, a 1 to 6, a 1 to 10 risk to reward ratio can also be profitable, but mentally it is a lot harder. Why? Because you will have a lot more losers than winners because of the high risk to reward ratio. Whereas if you go with a 1 to 2 risk to reward ratio, which isn't a small one but isn't big either, you will have a good win rate as well. You will win more often than you will lose, and mentally that will be very beneficial. And that's why I will use a 1 to 2. I will pretty much aim for this low here and say I'm risking $100 on the MetaTrader account that we created. I want to make $200 on this trade. Now that we made our technical analysis and we have a trade that we want to enter, we will hop on the MetaTrader app and we will enter the trade. But before that, we need to know the lot size that we are going to enter the markets with. And to find out what lot size we need to use, we need to do this next step here. What you need to do next is hop on Google, search for baby pips, and it's gonna be right here. Baby pips position size calculator. You will enter it, okay? And it's very, very simple. What you gotta do is select the account currency, USD. Account balance, we have a $3,000 account. Risk percentage, this is very important. You need to understand how much you are willing to risk per trade. Let's say we have a $3,000 account. I will use a conservative risk management and I will risk 1% per trade, basically $30 per trade. Okay, so we will put 1%. I want to risk $30 on that trade. If I want to risk $90, I will put 3%. Okay, but for this video, I will put 1%. Okay, stop loss in pips. To do that, it's very simple. You go on TradingView, you drag your mouse on the position tool, and you will find out that your stop loss is 25 pips, okay? Right here, I will input 25 pips, currency pair, Euro USD. It's so simple. And then all you gotta do is click calculate. It will show you amount at risk, $30. And you care about the standard lot figure here. The standard lot is 0.12. And now you know exactly what lot size you need to input on your trade. Now the next step is for us to hop on MetaTrader and place this trade. Now we are back on MetaTrader. We calculated our lot size and we know exactly what lot size we will use. To enter the market, it is very simple. We click on Euro USD, we click on trade, we select instant execution, okay? And right here, you will input 0.12, okay? The standard lot that you got from Baby Pip. Then you will input your stop loss. Let's check. The stop loss is 1.05258. You need to check TradingView to see the stop loss based on your position tool, okay? It's very simple. 1.05258 and take profit is 1.04490. After that, you click the sell button and right here we entered the trade. Okay, we can see that the trade is currently running. We are running in a small profit, and congrats, you just entered your first trade. I know it wasn't really hard, was it? And right here you can see how the trade is running live on your MetaTrader. But now that you entered the trade, you also need to know how to close the trade. Okay, maybe for some reason it's Friday, you don't want to let the trade run over the weekends and you want to close it earlier. How can you close a trade manually if it hasn't yet hit the stop loss or the take profit that you have set? Well, it's very simple. All you gotta do is click the position here and click on close position. And then select this orange button here, close, sell at this price, and boom, you have closed the position. You can see we are now at -$1 on this account. And then you can check the history. Okay, you can click the history button and you will check and see the trade that was closed. You can either close it manually or the trade will close automatically at your take profit or at your stop loss level. Okay, and right here we can see this euro-dollar trade that we closed in a small loss for a negative 0.96. Once again, on this trade we risked $30. Okay, so if the stop loss would have hit, we would have lost $30, but if the take profit would have been hit, we would have won $60. We calculated the lot size on baby pips, we clicked the sell button based on the technical analysis, and then we close the trade to show you guys exactly how to close a trade. All right, so now that you placed your first trade and you also know how to close it, your question might be, well, if say I made some profits on my live broker account, how can I withdraw these profits? Well, it's very simple. The withdrawal is made through your broker. All you gotta do is basically log in your broker account and you will see there that you will have the option to withdraw. You will click that option, you will select the amount that you want to withdraw. Let's say you on your $3,000 account, let's say you made a $60 profit, and say you want to withdraw that profit and you want the account to be back to 3,000. All you gotta do is select withdraw. After you click the withdraw button, then you select the amount you want to withdraw. In this case, it will be $60. You click approve, and then in the upcoming days, the withdrawal should hit your bank account. It is that simple, and then your account will be reset at $3,000. If of course you only want to withdraw $60, that is totally up to you. The amount you want to withdraw is totally up to you. Congrats if you made it so far. Now you learned the basic, you were able to place your first trade as well and also to close it. You pretty much know everything you need to know in order to start Forex trading in 2025. But now I want to go back to what I've mentioned in the start of this video. I've mentioned that you can become a profitable Forex trader and make a living out of this without having to risk your own funds. What do I mean by that? Well, say you're starting trading and let's say you don't have a lot of capital on the side that you are willing to deposit on a broker account and then trade. That was my case as well. When I started, I only had 3,000 euros to my name, and I did a huge mistake to try and trade my own personal funds because I wasn't aware that there's a better route, a route that I would definitely take if I would have to start over in 2025, no matter my financial situation. I am talking about the prop firm route. A very simple explanation is this. A prop firm is pretty much a company that puts you at test. You need to pay a challenge fee in order to get a trading account, and there's multiple balance options. You have a 25K account, you have a 50K account, you have a 100K account, you have a 200K account. For example, you want to go for a 100K account. You need to purchase the 100K trading challenge. It's a fee of $500, and then you will receive a 100K demo account. On this demo account, you will have a target that you will need to reach in order to then receive a 100K live funded account that you will be able to trade and withdraw up to 90% of the profits that you will make on that account. So you can see how with a $500 investment in a matter of weeks, you then can qualify for 4 or 5 figure payouts and then scale from there. That's the beauty about the prop firm route. It wouldn't make sense for you to try to trade a personal $500 account, because even though you are profitable, you are a profitable trader, you know how to trade profitably, it's going to take you so much time to grow that account if you're not trying to risk it. Because if of course you're trying to risk it and risk say 25% on a trade, then of course you will have a better chance to grow it faster, but you will also have a chance to blow that account as well. Instead, much better would be to invest that $500 into a 100K challenge, pass it, and then on the live funded account, if let's say you make 5%, that right there will be a $3,000 or a $4,000 payout out of a $500 investment. And even though let's say you do have personal funds that sit on the side and you are okay with risking those funds, I would still recommend you to take the prop firm route instead, because even with my current financial situation, I would go for the prop firm route instead of trading my own personal funds. And when it comes to the best prop firm to go for, that in my opinion is definitely SabioTrade, a prop firm that I currently work with. Why am I working with this one and not a different one? Well, because they have one of the best prices in this industry. They have a one-step challenge, meaning that you only need to pass one phase in order to get a live funded account, whereas other prop firms have a two-step challenge. You have instant withdrawals, meaning that the first profits you will make on the live funded account, you can literally request a withdrawal right then and there, and that's very key, especially for new traders. You can scale up to 2 million in terms of total funding, and there's plenty of other benefits. And on that note, if you want to sign up with this prop firm, click the link down below in my video description and make sure to apply the code SMCDAN for a discount. That being said, if you made it so far, pat yourself on the back, because not only you saved a lot of time, but you saved a lot of money as well. You see, if I would have been able to watch a video like this when I got into trading, that would have probably saved me around 3 to 4 months, and it would have also saved my whole savings as well. I had 3,000 euros saved up when I started trading, and I blew it within the first 3 months just because I didn't have the right guidance and I was very stubborn and impatient. And on that note, this right here was only the tip of the iceberg. If after seeing this video, you decide that this is what you want to pursue and you want to become serious about it and you want to turn trading into a business and eventually make a full-time living out of it, you should definitely consider to apply for the mentoring program and step by step learn exactly how I trade to then be able to replicate results like this or like this in the matter of months. It is the first link down below, and on that note, I really hope you guys enjoyed this video and I hope you found it valuable. Until the next one, if you want to see a trading challenge where I traded in my car for a full day to see exactly how much money I can make, click this video right here. Take care.